This is really about being free to create what you want your life to look like. We each are our own hero. And how do we take the challenges that come our way and see those as the birth process of us becoming heroic? Can you meet that judgment that ultimately will surface with neutrality?
This is the Wall Street Coach Podcast with Kim Ann Curtin.
So glad you guys are here to watch my podcast. Thank you. Please make sure to subscribe so that you can get notified when we have new podcasts. We've got a lot of great guests coming up. Please don't forget to sign up for my book, Discipline and Finding Your Edge. It's a free ebook. If you go to traderdiscipline.com, you'll get a copy of it. And you're going to love this interview with Anthony Scaramucci. Thank you for watching. Welcome back, everybody, to the Wall Street Coach Podcast. I'm so excited today to have Anthony Scaramucci here, also known as the Mooch. I got to meet Anthony back in 2016, and I'm a huge fan of him, most of all because his straight from the hip style. He's able to take really complex financial conversations and really transform them into conversations you can talk to understand everything. I don't know how you do that, Anthony, but it's definitely a gift you have. So thank you for coming on our podcast. And I'm going to read your official bio just for those who might be living under a rock or in a dark cave who have never heard of you, because I don't know anybody that wouldn't have heard of you at this point. But of course, Anthony is the founder and managing partner of Skybridge Capital, a global alternative investment advisory firm. And as of 2021, the firm had over $6 billion under management. More than a decade ago, he founded and launched the annual SALT conference, a gathering of business leaders, politicians, athletes, and entertainers. He started at Goldman Sachs in '89, was appointed vice president of wealth management in '93. He attended Tufts and also Harvard Law School, and served, of course, as the White House communications director briefly in 2017. Thanks for being here, Anthony.
It's good to be here. It's always a pleasure to be with you. Aloha. Tell me, tell me what you'd like to talk about. We'll go in any direction that you want.
Well, I just finished reading your book, The Sweet Life of Bitcoin. I'm really feeling completely enrolled after reading that book. I'm also sad to say that in 2008, when I coached for free outside the stock exchange for a year after the crisis, there was a shop next door to the stock exchange that was a Bitcoin front. It was like a little office where they were trying to teach everybody about Bitcoin. And I have to say, finishing your book, I was like, God, can you imagine if I had been enrolled by that guy who was in that little office? So I'm just curious, when you first heard about it, your pushback, and then what the time difference between jumping on board to write this book?
So, I mean, it's a great question because, as you know, we all heard about Bitcoin. We all learned about Bitcoin, but studying Bitcoin, it probably took me until 2017. So the Winklevoss twins, who run Gemini, they had gotten a settlement from Facebook. They put a lot of that money into Bitcoin. They came to my conference, the SALT conference in 2014, to talk about Bitcoin. And I listened and I said, it's very interesting, but I'm an institutional investor. Unless it scales, it's too speculative for me. Obviously, we all wish we had bought Bitcoin at $10, but I couldn't buy it at $10 as a fiduciary. I had to see a scaling process, and that started to take place in 2017. And so I took some notes, and I said to myself, if Bitcoin could get to 100 million wallets, I could scale into it over time and store it safely. And of course, maybe your viewers and listeners know about this, but Mt. Gox, which at the time of the hacking of Mt. Gox was one of the largest Bitcoin exchanges, and a lot of Bitcoin and other cryptocurrencies were stolen in 2014. So I was very worried about that.
Yep.
When it became clear that I could store the Bitcoin at Fidelity or a place like NYDIG, and I felt pretty safe with all that, we made the decision to start wading into Bitcoin. We made our first Bitcoin purchases in November of 2020. We scaled in over a 3-month period of time. I think our average cost was about $18,000 a coin. They're roughly $40,000 a coin now. So anybody that buys something a year ago, 2 years ago, and it doubles should be very happy. But what happens with Bitcoin is it went from there to 70,000 and now it's back down to 39,000. And so there's some pain in that for people. People like to mark themselves to the market immediately. And of course, if you're in Bitcoin, you know that you have to have a very long-term horizon. It's speculative. Yep. It's a volatile asset. Obviously, I'm a big believer in it, but we have to be patient. You probably know this too, but it's also worth sharing. The best performing accounts at Charles Schwab, Kim, are the dead people. Okay. Why? Well, they don't do anything. They don't change anything. They don't get emotionally tied into the account. It isn't until their executors and their heirs get in there and they start hacking it up. But the truth be told, we're just so much better off making a long-term strategic bet and staying patient than we are riding the volatility curve, which of course comes with our emotions.
Yeah. And you spoke in the book that is part of what the person who considers Bitcoin has to realize they're signing up for. They're signing up for this the early volatility is part of why you have to go into that with that mindset. And if you just start from that mindset, it's going to be a different relationship to that volatility. I loved how you spoke to that in the book because that says so much. It's like, have your eyes wide open. You're getting this opportunity because it's volatile. So be comfortable with that.
I mean, that was the resonating message of the book is I wanted to make a statement of explanation of Bitcoin, explain a little bit about the mining, explain why we became bullish on it, what our odyssey was, but then also to tell people, listen, it's an early technology. It's an early technical adoption story. Some people push back on me and say, oh, well, it's 13 years old. I said, well, it is 13 years old. But remember, if you bought Amazon at age 13, Amazon's turning 25 or 26, and I'm measuring that by the public offering. Obviously, the company was formed in 94, but it came public in May of 1997. And so what I tell people is if you bought Amazon when it was 12 or 13 years old, you went 64-1 on Amazon. All you had to do was stay patient and have high conviction. So to me, this is a very early story. It comes with a lot of volatility. If you look at Bitcoin wallets, you're only talking about 150 million owners of Bitcoin, 250 million wallets, meaning one owner could have more than one wallet. And when I think about that, it's less than 2.5% global saturation for Bitcoin. So for me, just imagine we get the 5% or 10%. And as you and I both know, there's only 20 million coins. So, and as I do point out in the book, some of these coins were lost in the early inception of Bitcoin. And just when you think about that, there's probably only, after everything's fully mined, there's probably only 19 or so million coins. You know, somebody had them on their BlackBerry in 2010. They threw the BlackBerry in the landfill, and out with the BlackBerry went the Bitcoin. So, you know, listen, I mean, that's what makes a market. I'm excited about the future. I want my clients not to miss it. And that's why I wrote that book.
Yeah. The other thing that you spoke to, and this was an interview I did with you a couple of years ago, you talked about just you're starting out in finance, that you were just really conscious to the humility you needed to show and the intellectual curiosity. And that's what I felt I saw happen as you talk about the beginning exposure to Bitcoin. But I just, as a, emotional intelligence kind of coach, I'm always curious, like, where do you get that intellectual curiosity? And how do you check yourself that you're always coming back to that?
So it's a really good question because, we get so many things wrong. I mean, you don't have the time in the day for me to list all of the things that I've gotten wrong, several phone books. But what I am trying to do, there's a term from the neuroscientists called neuroplasticity, which basically means the growth of your brain and your ability to see things differently, to make adaptation. The brain typically matures by the age of 30, at least for a male, it does. And what ends up happening to you is you start to get locked in to certain ideas, certain ways of living, and you start to get closed-minded. And so it's like exercise. You have to force yourself out of your comfort zone to start thinking about things differently. So what I always try to do is I try to grab books in the bookstore or at Amazon that are outside of my range. And I say, okay, let me see if I can understand this. And so for me with Bitcoin, a couple of my friends I'm close to got involved with it. I was a skeptic, but then I said, you know what? These are super smart people. Let me do some work on this thing and let me keep an open mind. I think we have to do more of that. I'm not going to convince people on some of my political views. Everyone's locked in. We're very tribal. We have this identity political movement now. I could prove things to somebody empirically. They still will tell me to go scram. But in business, I think results matter. And if you are demonstrating successful investment results, or you're demonstrating that you have found something that has this proliferation of use cases, the results are irrefutable. So there are certain parts of our lives where objective criteria really do matter. And I think this is one of them. If you just look at the rate of change of growth in an industry, when I bought my first Bitcoin, we were talking about 140 to 50 million owners, approximately 240 million wallets. There was about 30 million owners, and there was about 80 million wallets. And I just want you to think of the growth in the last couple of years. Now, if you zoom out, the $18,000 average coin goes to 40. That's a pretty good move. I just asking people, just zoom out, take a chill. Yep. We're waiting for some regulatory things to be resolved. I'm very bullish on the forward positive regulation because, Kim, they didn't want Uber. The regulators railed on it. The Congress railed on it, but we ended up getting Uber. Why do we get Uber? We got Uber because the people wanted Uber.
That's right.
Okay. And so ultimately with 73 million accounts at Coinbase that are US-based accounts, I got my money on the people. The people are not going to move from this. There is a race going on in Ohio right now, whether you like politics or not. There's a Republican just won the primary. He's running against the Democrat. The primary's over last night. They are both pro-Bitcoin. Wow. They're both pro-cryptocurrency. Why? They don't want to lose those voters. And a lot of these voters are one-issue voters. So I think this stuff happens over the next year. I think it's going to be pretty positive.
Yeah, for sure. One of our podcast friends, Confessions of a Market Maker, their Twitter handles Beyond the Trades. We put out that we were going to be talking to you today. They put a question forward. They wanted to know, should retail traders pay attention to the VCs now backing blockchain projects? In other words, should they be betting on the jockey and not the horse? Do you have an opinion on that?
Yeah, really, really good. I mean, these are really good questions. So I don't think we're going to know. And this is the problem with where we are right now. And so what I would say to those people, I've been humbled by markets in life, so I don't know the answer to the question. And I think we're only going to know through time, the elapsing of time, because, for me, I'm taking a portfolio approach. I'm making a bet that Bitcoin lives. I'm making a bet that there are certain layer ones that live. There's a lot of VC money getting thrown into the private companies. The valuations are very high. I've participated on some of those deals, including FTX. And maybe some of those deals are going to get haircutted now because of what's going on in the markets. Although, we're getting some guidance from the Federal Reserve that they're going to go a little easier than we all thought on interest rates. But I don't think we know. I think at the end of the day, we have to take in a new market, we have to take a portfolio approach. And here's the other thing I would say. If I took you back to late 1990s, the markets were valuing Web 1 with these gigantic valuations. Why? Well, they knew there was a massive technological trend that was taking place that was going to get adopted. However, what the market got wrong is they just didn't know who the winners and losers were going to be. So when pets.com went out of business or eToys went out of business, they had these exorbitant valuations at their peaks, but they didn't make it. But Amazon made it. Google eventually went public in 2004 and made it. And so we don't know the answer, but I'm taking a portfolio approach, and that's what I would recommend.
Yeah. One of the questions of this guy, Michael C. on Instagram, asked us to ask you about crypto, coins, tokens, and airdrops, and how do they all tie together?
Yeah. So, I mean, again, it's interesting because they tie together in many ways, but they're also different markets, right? So, the NFT space to me is a little bit like the art market. Some of that stuff is based on scarcity. Some of that stuff is based on momentum. There's a little bit of a trading frenzy that goes on in that market. It could get very hot or cool off. Mm-hmm. The airdrops, I'm not that experienced in, so I'm not going to opine on that. But what I will say is that there is a disconnect right now between the private company valuations and the underlying tokens. And so I would say something that I want people to think about. I think you're better off buying the tokens because, a lot of our institutional friends are like, well, I can't own cryptocurrency. Warren Buffett hates it, but they're making these large investments in private companies that are related to crypto. And by the way, Buffett owns a very large position in a Brazilian bank that has filed for a Bitcoin ETF, but we won't go there for the sake of exposing that level of hypocrisy. But the point that I'm making is these private companies have these very high valuations, and the coins have these lower valuations. I would rather buy the coin because remember, the coins have to go up for the private companies to do well. Yeah. And so I think, and it's more liquid. It's more liquid to buy the coin. So, but the NFT market to me is more like the art world. There's some fundamental analysis, but it's really, what is a buyer going to pay for it? And ultimately, somebody said to me, well, I don't understand it. This is a person that's my age. I said, okay, you don't understand it, but you understand the Mickey Mantle card. Oh, I totally understand that. Okay, well, hold on a second. The Mickey Mantle card is a mid-20th century piece of cardboard. It has 4-color processed ink on one side, mixed faces on it. On the other side, it's his rookie stats. Is that worth $5.2 million? Oh, yes, it is, because it's part of Americana. It's part of the Yankees. It's part of, he's the All-American boy in the post-World War II era playing baseball, and it's very scarce. Okay, well, how is that different from a digital fingerprint, an NFT? How is that different?
Beautiful. Well,
you see what I'm saying? And that's my point. We're not living in the future, but we need to understand our children that are taking us into the future. Yeah. We have to figure it out with them.
For sure. Yeah. One of the gentlemen off Twitter said, did you have an opinion on the SEC bringing a case against Ripple XRP?
Yeah. So I don't know the case well. I know there's a lot of people upset with the SEC thinking they're being overzealous in terms of their enforcement. It's a regulatory agency, but they seem hell-bent on going full hog on enforcement related to crypto. They just hired, and they made this big press release with a lot of fanfare. They just hired an additional 20 people or so to come after the cryptocurrency markets and the cryptocurrency businesses. I don't want people to get ripped off. I don't want people to get hacked. I don't want people to get scammed. So I'm all for fair and propitious regulation. But if we're sitting here where Canada has a cash ETF, Europe has a cash ETP, and we're the United States, the financial center of the world, and we can't get there, I got to tell you, I think it's a mistake. So, I don't know the Ripple thing, but I do know that the SEC is in a little bit of a land grab for regulation.
Mm-hmm. Yeah. Lucas, did you have some questions? I don't want to take them all up.
I guess I would wonder what do you see as the biggest hurdle for like major adoption for Bitcoin or whatever the cryptocurrencies in general?
Well, I think that's the biggest hurdle. If you told me tonight, Lucas, that the SEC was going to approve a cash Bitcoin ETF, I think that opens up a floodgate of activity because let's say that I'm an executive at a private bank somewhere. I'm like, okay, I have to have a cash ETF. My clients are going to ask for digital asset exposure, and my competitor down the block is going to own it. I got to own it. Exactly. You see what I'm saying?
Yeah. Do you think that's what would be? There's been talks I've heard of with people talking about like different currencies, like the US dollar going onto blockchain. Do you see that as being some sort of competition to Bitcoin as well?
So if you told me that the US dollar was going to be on the blockchain and there was going to be a fixed supply of the US dollar, the US government was no longer going to make any more US dollars, and it was limiting the supply of the US dollar as a result of it being onboarded on the blockchain, then I would tell you that would be out there as a potential competitor. I don't think it's a Bitcoin killer, but I think it would be way more competitive. I think what ultimately happens is, I think Professor Neil Ferguson is ultimately right. These things coexist with each other. I predict that there will not be a digital US dollar. The social control involved with that is too autocratic. It's too authoritarian. We still have a Fourth Amendment right to privacy. If you have a digital US dollar and it's on your smartphone, it's in your smart wallet, then they know an awful lot about you. It is not clear that we would want them to know that much about us. It's still a fairly individualist society, a fairly free society. If the Chinese are against it, I'm pretty sure that we want to be for it. I'm just pretty sure that we do. Okay. And so to me, I like the fact that they're against Bitcoin and they're for the digital yuan. I would like us to be for Bitcoin and against a digital US dollar. But of course, we could have a stable coin, and a stable coin could trade at a constant of $1 US, and we could use that for commercial activity.
What was the reason you decided to do the Skybridge Node? So impressed with that, by the way.
Well, I wanted to send a message to the community, to the Bitcoin community, that we were in and that we wanted to have a node up on the network where we were out there like everybody else in the community, trying to help support the accuracy of the network, preventing the hackability of the network. And so to me, I thought that was a good move.
Yeah, it just felt like, to me, when I read that in the book, that it was you just literally walking your talk.
Yeah, and I think it helped us a lot in the community. I think people are like, okay, these guys are super serious,
Yeah, it's really impressive. What is your take right now, or advice be to traders and or investors, just where we are in the market, geopolitically, all around?
Well, I'm bullish. I know my friends are bearish. Paul Tudor Jones was on CNBC saying this was a very difficult market environment, and he's more focused on preservation of capital. And he's a lot smarter than me, so he may be right. But when I step back, what I see an environment where we probably printed too much money to try to help people during the COVID situation. And we're trying to figure out a way to reel that back. At the same time, we have these supply chain issues, again, born from COVID. And I sort of feel, rightly or wrongly, that this stuff is going to abate. And we have so much pent up demand. People are looking to go back to restaurants. They're looking to go back to conferences. They're looking to do some summer travel. I just think that you're going to look back and say, well, wait a minute. The forces of technology were out there such where it was deflationary. And yes, we had inflation born from the pandemic, but it got tamped down. The Fed is going to get to the right interest rate number and the economy is going to boom. And we're going to be sitting here saying, geez, I don't want to miss that for clients. Yeah. So I'm more optimistic. You know what I mean?
Yep.
But but here's the thing, I could be wrong. That's why I have a diversified portfolio. That's why I've got some, hedge fund strategies in my portfolio, like Steve Cohen, which I would describe them as high gross, big portfolio, big balance sheet, but low net businesses. Steve was up like 2.7% last month. even though the market really crapped out, he did very well. You got to have a little bit of diversity in there. I might be wrong, but I'm diversified enough where I think the portfolio is bulletproof. So if I'm wrong, we're going to lose some money, but we're not going to lose money where we're fully capital impaired. I'm reading about people down 40 to 50%. It's very hard to come back from that. But I'm not saying they won't. Yeah. But remember, if you go down 50, you got to make 100% to get back to even. So my goal is when I'm losing money to try to lose the 5s and 10% of the world, not the 50s.
Yeah. What do you think about Musk and Twitter?
Well, I think so much of it that I'm trying to figure out a way to get involved in the privatization. I do believe that there's going to be a financing associated with that privatization. He'll eventually take the company public again after he cleans it up. And I'm a huge Elon Musk fan, and I would never bet against him. Yep. I don't buy into the arguments that the left has about him related to free speech. I think he's going to do a good job at being fair. Mm-hmm. Some people ask about Donald Trump. Remember, Donald Trump was a terrorist threat to the United States. The National Counterintelligence Center deemed him a terrorist threat because of the traffic on his telephone and because of what he was doing at the nation's capital on the 6th of January. So he got taken off of Twitter for a number of different reasons. You may not like the Ayatollah, you may not like President Putin, but they weren't deemed existential terror threats to the U.S. like Donald Trump was. And I think that's a very important distinction. If you're going to put him back on Twitter, that's fine, but he's a direct threat to our democracy in a way that those other people are not necessarily.
Yeah. All right, because I know you have to go, I have another question that's going to make the last one. But for those who read your book, The Sweet Life of Bitcoin, who say to themselves, you know what, he's right. I do agree that this is the future. Where do those people begin? If they're all by themselves now all their friends think they're wrong and they have to go solo, how do they begin to dip into that pool?
So I would say to you, open up an account somewhere, a Coinbase, a Kraken, an FTX, and buy a little each month. I have people that are buying $10 a day. I have people that are buying $100 a month. Just buy a little each month. Before you know it, it'll grow into a nice little nest egg, and you'll at least have a toehold. Here's the other thing. When you own something, it's very clarifying. I think we have a tendency to not understand things until we own them. If I buy myself a car, and I'm driving in it, then all of a sudden I notice every other car like it on the road. If I don't own the car, they're driving by, I'm not thinking about it. You sort of have to own a little bit of something to really get steeped in it and to really know it. And so I'm just encouraging my clients. It could be 0.5%, 1%, just a small number. Just get in there, buy a little bit of it. And before you know it, you're going to be a very happy camper.
Yeah, it's awesome. Muhammad Ali over your shoulder.
Yeah.
Tell us about that picture.
Well, listen, I love the champ. There's a picture of me and the champ here in my office from, it's a younger version of me for sure. It's probably from 20 years ago, but I love the champ. The champ, he spoke out against the Vietnam War. He was a big part of the civil rights activism in the 60s, try to make the society fairer, more equal. But he beat to his own drum, and he was a very loving, very giving guy. He had a heart of gold, and he was a fighter, literally and figuratively. And of course, his greatest battle was with Parkinson's, which he battled for almost 25 years. And so I have a huge amount of respect for him. I miss him. I used to raise money for him. That is something that was gifted to me by the Muhammad Ali Foundation. And it's actually, if you got close to it, it's signed by the champ.
Oh my God.
And it's something that when I started Skybridge, it was in my first office. And so even though that's a glass, I pinned it up on the glass. This office is surrounded by glass. I was like, okay, I'm putting that in my office. I don't care. So
it's just the energy, even at a distance, is just that moment of victory.
He's the man, around on the other side here is Jackie Robinson. Those are my two heroes. Those guys, you don't get Muhammad without Jackie. You don't get Barack Obama without Jackie. ML King Jr. has a harder time without Jackie. And Jackie, took a lot of abuse mentally and physically to do what he did 75 short years ago. And, you know, I'm for a fairer, more just society. You know, I'm a Republican, but I'm like a common sense, normal Republican who does believe in fairness and equality. I don't believe in this sort of right wing nativism and this ethnocentrism and stuff.
Well,
what I hate it. You know,
their qualities to me are unstoppable, and I have to say that is the quality I just see you constantly portraying. Like, you are unstoppable. You're just pivoting. You always know how to bounce. You don't take things personally. It's incredible, Anthony.
Well, it's sweet of you to say. I mean, I have my bad days too. I just want to, let you know, like,
but
I will say this:
you have your bad days. That your ability to handle those bad days and bounce back is so inspiring. If you didn't have the bad days, you wouldn't look human.
Well, here's what I would say to you. If you're ever having a bad day, Kim, give me a call. I'll regale you on the day that I got myself fired from the White House. Okay, July 31st, 2017, blown into Pennsylvania Avenue and lit up by every late night comedian in America. Okay. But that wasn't enough. The cable news pundits were also, ripping me up pretty hard too. So, it's how you handle things. You know what I mean?
How did you handle that? How did you navigate that without crevicing?
Well, look, I grew up in a blue collar neighborhood. My dad said something to me that I'll share with you. When I got my first job at Goldman, my dad said to me, "Hey, I don't ever want to hear you complaining about your job." And I'm like, "Why is that, Dad?" He said, "Well, let me tell you something. You're indoors, you're out of direct sunlight, and there's no heavy lifting." Okay. And there was a guy that worked 42 years on a crane in hot and cold weather. And he was sending me a message, "Hey, you should be grateful for what you have." So even on the day of getting fired from the White House, I was, contemplative. It sucked. It was a bad day. I mean, who's kidding who? But I was also philosophically in check that things are going pretty well for me, and I'll do the best I can to make the best of this too. Yeah. Well, but before we go, I just want to let everybody know I have 1 million more Twitter followers than Donald J. Trump. I just thought I'd put that out there. All right, but you guys have a great one. Thank you so much for having me on.
Thanks, you so much for coming on. And I hope just everything unfolds as you speak about in the book. It was an inspiring book, short and sweet, right to the point. So a must read.
I appreciate it.
Thank you, Anthony, so much.
All right, good luck with it, guys. All right, we'll see you soon.
Okay, aloha.
This is the Wall Street Coach Podcast with Kim Ann Curtin. You can download Kim's free ebook, Discipline and Finding Your Edge, at traderdiscipline.com. And learn more about working with Kim and her team at thewallstreetcoach.com. And if you're feeling generous, please leave a rating and review wherever you get your podcasts. Thank you for listening.